Russ, we were talking about the fact that a lot of the stocks are range-bound. They've been range-bound for quite some time, that a lot of the money is actually not invested at the moment. Is there a danger that people looking for yields go into too risky products, right? Illiquid products?
I think that's one risk. The other is that they're actually going to safe products that are less safe than they think. And a good example of that is, parts of the market that have gotten so crowded because investors are desperate for yield. So some of the utility companies, some of the more defensive companies that have just been on a roar all year because investors are desperate to get yield wherever they can, and the valuations have reached levels you can't justify fundamentally.
But the cut here is the elites want that, but you're saying there's a price to that. When do the elite institutions figure out that if they're goosing the system, there's a cost on the downside?
I think this is an excellent point, and I don't think it's fully appreciated. You hear this again and again when you speak to direct investors, you speak to advisors, the level of desperation
exactly
that investors are going to get yield. And there's a simple statistic. In the eve of the financial crisis, all of the bond market yielded above 4%. Today, it's less than 1 in 5 bonds, and the bonds you have to get that yield are too risky for most.
What is the social price of that? The heart of the matter is, and this goes to the Bloomberg Global Business Forum, all the fancy elites we talk to think this is brilliant theory. Not a single viewer or listener living your move from 4% to sub 2% agrees with that idea.
Well, you see it when you speak to investors. You think about the 65-year-old retiree that used to have a muni bond ladder and they slept well at night. That is no longer a viable option for people, even those that did the right thing, they save for retirement. No one expected low yields to last this long.
Okay, but what does that concretely mean?
I think it means that you're seeing these segments of the market get stretched where investors can get yield or income, and they're going up to valuations that are questionable because people are desperate to get that 4 or 5% yield, and there are very, very few places left where you can achieve that. Whether you're talking about emerging market bonds or high yield or dividend stocks, the valuations are likely to get more stretched in that elusive search for income.